Heidi ho, everyone, and welcome aboard. I think I had a false start there for some reason. My apologies for that. I couldn't see the chat. Thank you, Angel, for all. And welcome aboard, those of you who haven't been here before, especially welcome to you. And of course, our old trading buddies, welcome to you as well. Old, as in, this year or a couple of years or however long. All good. And it's pleasing to see your names. I can't see your faces, but I can see your names. Okay, so this show, for those of you who are new, is all about you guys and trying to, I guess, share opinions and share trades if you've got trades. I certainly have one order for today, but that's it. Thus far, we may find that Ash will burst into the room very shortly and he'll have something on the Ftse. Most likely, I would imagine. We shall see. But let's go and do the usual routine. The usual routine, of course, is that we try and find a breakout for the first candle of London session. And thus far, we don't have an indicator here that tells me I need to trade it. Now, for those of you, again, who are new, what we attempt to do is trade the breakout of the range of the previous day's trading plus the current day's trading to date. So there's the previous day's trading between that level and that level, and here's the day's trading between that level and that level. If the low here was lower than Friday's, then that would become the range, and if the high, wherever the high is in that 36-hour period, let's say, that's where our our range is depicted. So what we're attempting to do is get the breakout of that range. So the range today, for argument's sake, is indeed Friday's range because we are still inside that. Now, a couple of things to take note of here. One is, if the range is indeed a range, in other words, the market's not trending, and I'm happy to say that that's the case in here. We don't have lower lows and lower highs. We've got, in fact, a lower low, higher low, lower low, lower high, higher low. Goodness knows what happens next. So we're attempting to break out of the range, right? And if that's the range, we need to set realistic take profit levels. Now, the take profit level for this particular trade is 1-to-1 for the initial part. Now, we actually don't take any money off the table at that point. We simply move our stops to entry, making it a free trade. Then we look for the 2.5-to-1 level. So if the risk today, if I were to trade it, was 102 pips, let's say 102.4, let's say 100 pips, right? We'd be looking for 250 pips to take our profit. And that's exactly where we would stop trading it at that point and put our money in the bank. Now, if we're going to do that, we need to have a realistic approach and say, well, okay, are we going to have 250 pips available to us, or at least 100 pips available to us before we hit solid resistance or support? And that's really the key parameters under which I trade this. So if we go out the 4-hour chart, for instance, there's our range. We would enter 5 pips above if we're going long, and we would enter 3 pips below if we're going short. So let's say we entered there with a risk of 106 pips, let's say. Have we got 106 pips before we hit support or resistance? In this case, resistance. That is the first resistance level, in my humble opinion. Answer no, 85 pips. And then to get TP2, which is 250 pips, don't forget, very, very difficult to achieve. In terms of going short, first level would be, from entry, first level would be 49 pips. We're looking for 100, right? It doesn't make sense to take the trade. So for that reason, I won't take the trade, and that becomes null and void. thought you just might like a little explanation as to how we go about that. So that's why today I won't be trading the pound US dollar breakout. Righto, so what are we going to trade, if anything? Hi, Lewis, and hi, Paul P. I hope you had a great weekend too, Lewis. Yeah, I did. I was kind of busy, and then I celebrated on Sunday. Wasn't feeling that well yesterday. Yesterday afternoon, celebrated on Saturday. That's right. All blurs, doesn't it? All right, what we've got today. Yeah, I've got an order. I've got an order in the market. It is trading the weekly chart, and it is Cad Swissy. Why haven't I got that written up? I don't know. I'll put it up for you guys so you can have a good look at what I'm doing. I have anticipated a bit of downside for Cad Swissy, and I have, well, 1, 2, 3. I've probably got a quadruple top there, and I've got a potential lower high. I don't know if it's a lower high yet, but it is shaping up that way. So the parameters of these, I was absolutely sure I had this tightened up, but obviously not. Cad Swissy, and I'm selling at 0.7313. I've got a stop loss at 0.7429. And my first take profit is 0.72 something, 59. There we go. All right, so there's the trade. Actually, I'll make that a bit bigger for you. We'll go with that level there. There we go. Now, let me explain why. Why would I be contemplating Cad Swissy short? Well, let's go to the bigger picture. The bigger picture, this is a monthly chart. Let's go even a little bit wider than that. Monthly chart is telling me that the most dominant feature on this chart, apart from the range that we've been in for 7 years, is the big top that we've got here. I think this will work. Yes, there we go. So we've got a big double top sitting here. And since then, we've been in lower low, lower high, lower low, lower high, lower low consolidation. Lower high, lower low, could be lower high. So I'm of the opinion you've gone CAD yen instead. Okay, yeah. Look, wouldn't argue, and we might have a look at that. It is on my my watch list, Lewis. Absolutely, CAD yen. But this one is tradable now, in my humble opinion, because of, okay, we've established a bias. The bias is short. We've got, as I said, a triple or quadruple top sitting here. We've come back underneath most important, I'll call it most important, horizontal level there, which is what, 73.80, let's call it 74 even if you want. But it has a big history of being support for this currency pair. We've ducked back underneath it, tried to go back again. Now it's become resistance. And the weekly bar is showing me a strong reversal potential, and it does have a green body, which I love, as most of you who have been here for a while would know. So no qualms about taking that. Only trading at 0.5% because it is a potential reversal of trend, and let's stick with that until we're proven wrong. If we are proven wrong and we get taken in here, we'll find maybe a little bit of support around about there at the low, but I'm thinking we'll smash through that. And given time, I think we can work our way down here on Cad Swiss. Now, it's interesting because I'm actually a fan of the CAD, and I don't like to trade against it, but it is very, very much dependent on what, not dependent, but correlated to what oil does. Now, oil, as you've probably seen on your charts, hasn't been performing that well. Now, interestingly, oil is at a bit of a level. So this could go either way. It'll be interesting to see what this day offers for oil. If it was to break down again, then I think oil's probably going to continue its fall for a little bit. Don't know about fundamentals so much. That's a job for Ainsley, who spoke to us last night. I can't remember exactly what she said, to be honest. But it doesn't matter that much to me. The chart's a chart, and chart's telling me that we need to trade, well, oil potentially short, certainly, and that may translate to CAD short as well. So that is, I don't know if it's even the trade of the week, but it's certainly a trade. It may be the trade of the week. We'll see. I agree with you, Lewis, on CAD yen. We'll come back to that in a tick. But I want to have a look at the game changer bars for the week. Now, those of you who don't know what game changer bars are, they are candles who are telling me the next direction is going to be that. And this one has a high whose high is higher than the previous week and closed on or near its low. And that is the definition for mine of a game changer bar. Now, I couldn't possibly enter the market here trading that bar. It just doesn't make any sense to me, because the potential reward before you hit support is absolutely ridiculous. So if I was to enter there, put my stop loss there, 140, let's say 150 pips, I've got 31 pips before I'd need to take profit. That's not good enough. So for that reason, I would not be looking to enter the market at this point. What I would, however, be looking to do is find a level at which this makes sense to enter. So maybe if we got price back to here, I can still trade in that direction, short that is, but I'll be trading from here instead of from here. So that would be exactly what I'll be looking to do on this currency pair. Don't know if we can get up there quickly enough, but if that were to be the case, I think that's the place to go short, not where we are now on Aussie Kiwi. The next one's Cad Swiss, as we've discussed. Euro Aussie is also a game changer bar. I'm looking at the weekly charts, right? Nothing more than that at this point, because I want to get a directional bias for the week, where I want to go. Now, this one's probably not as obvious as some, and probably not as juicy as some, but what it does show me is pivot action, and it's across the monthly pivot here. And if the monthly pivot is to be a resistance and support area, then price should fall away here. However, if it doesn't, and we've got to use our imagination just a little bit here, if this is indeed a higher low based on that low, then price has got the ability to rally here, should have the ability to rally here. Maybe only to there, and that's fine, because you've got more than one-to-one to get to that level. I don't mind this. It is a red candled, a red-bodied candle, and I like to trade red-bodied candles long. The issue for me is twofold. Number one is that level there, which we'd be trading straight into, and number two is we've created a low test bar after a high test bar. That's the scenario I call the prickly pear, because it's got spines on both sides, and I don't like prickly pears because they hurt. And over time, I think the prickly pear is well avoided. Now you're
like Baloo.
Hello, mate. Sorry. What did you say?
I said you like Baloo. That's what he says to Mowgli, isn't he?
Oh, Baloo.
Okay. You know.
Is that what he said?
Yeah, he said. I mean, to
try
and
the
quote
prickly
him.
pear.
Yeah, you don't need to. So if you pick the right one, I can't remember. It's something like if you pick the big pawpaw, then you don't get prickled.
That sounds about right.
There's something to do with the pawpaw. I'll try and find the quote later on in the day.
Okay, I'll have to come up with a shape that looks like a pawpaw then.
Yeah, well, I think if you've got a trade which makes you think of a prickly pear, then you can certainly reference the Jungle Book somewhere.
Yeah, okay.
We can come up with our, we've always wanted to come up with our own candle patterns. Now you've got the Batman already, haven't you?
Well, I've got heaps of them. I've got 9 of them, as a matter of fact. I just don't divulge them without consultation. But look, I think this has got potential. We do have that little double bottom sitting there. We've got a bullish engulfing bar here. This potentially is a higher low on that. So I'm looking again, these weekly game changer bars are not necessarily to be traded, but they are to be looked at and looked upon as a potential direction finder. So, it's not just jump into it because it looks like it's going that way. It's wait until you get a signal. The way you trade, however you enter the market, you just look for that same opportunity at a better price than what you're going to get if you were to trade it there. So, this is very similar to the upside down version of Cad Swiss, right? It's the same thing, really, at the end of the day. And what we're looking to do with this one is trade it short. But I like this more than I do like that chart there, the Euro Aussie chart, because it has far more credibility in that it's tried, and it's failed. And I think this level now is telling you that it doesn't want to go there anymore. And I think there's downside to come here. So, as I said,
isn't it, mate? I mean, that test is an interesting one because we're looking at the weekly charts, which I think is the right thing to do anytime,
on a Monday.
really. On a Monday, and really, we should be looking at the weekly and monthly to find out where the long-term resistance is. And this is a support level, isn't it? Which is interesting, that the fact that it has bounced off the support level, but as you say, now it's gone up and it's effectively rejected what it considered to be resistance. Maybe not quite as high as the chart would have suggested. It suggested it would have gone, and it may go back up there. We just don't know, but it does sort of, because it has tested an upper level now. The downside's open. If it hadn't tested that upper level, I'm sure you wouldn't be looking at it.
Oh, indeed. Totally. But
it's all about context, isn't it?
It is always all about context. You can't, I keep saying that I love trading green-bodied candles that are rejection bars if I'm traveling short. But that's only one part. It's only one part of the equation. It's a long way from being tradable as per se. You need context, as you say, and the context here is pretty clear to me. And, the wider I go, the more I like this. If it had a red body and I was in the trade already, I wouldn't be that happy, because I think we probably need to see that this candle is valid. And to see that it's valid, I think you need to see that the bulls are actually not fussed in going any higher.
Yeah.
So, and that seems to be playing out at the moment. We'll see.
To give you a little bit of a cotton seasonal data on these two as well, these two sit right in the middle band. There's it's currency. These two currencies just aren't in the commitment of traders crosshairs right now. Which,
as I said earlier, I'm a fan of the CAD. I don't like trading against the CAD, but it has had a little bit of bad news last week, I think.
Agreed. Fundamentals aren't great with the CAD, and actually they are solid with the Swissy. I wouldn't say they're outstanding, but they are solid. Where the CAD is actually sort of starting to see some weakness in the fundamentals. So it makes sense certainly on a fundamental point of view.
Yeah, well, that's nice to hear, but I wouldn't have a bloody clue, frankly.
Yeah,
what the fundamentals are doing. But I love the fact that we actually do get to be trading buddies, because you can share that with me, and that makes me think, all right, maybe we've got something.
Yeah, and it's this is where I do think it's interesting, because you are looking at the technicals in much more detail, and of course, I do analysis on the fundamentals on a Sunday, and then throughout the week I'll kind of pick a different currency to kind of analyze. CAD and Swissy must be coming up pretty soon, because I haven't done anything on those guys. The ones that I'm up on, the pound. I don't know what you've done with the pound this morning, but I find the pound a very interesting currency right now, because
I dismissed it basically.
Yeah, well, the pound really should rally, because the the data is really suggesting that the Bank of England may well be pushed into the raising of raising interest rates, raising of the lower band. So Governor Bailey came out and effectively stated that he was concerned, and it was such a close call in November to raise interest rates that it would suggest at the time that raising interest rates in December was the right thing to do. And the pound rallied off the back of that. But then since then, he's come out and sort of tried to qualify that, try to calm things down a little bit on that. And this is the zone we're in right now, where the numbers are suggesting they could go anytime. And the rhetoric is like, yeah, we're going to go. Maybe we won't. Maybe we will. Maybe we won't. So we're on tenterhooks as we listen out for this data. And it's really with the pound, you're kind of making a bit of a gamble whether you think that they're going to raise interest rates in December or not. Now, because of what he said, I think that suggests that we should be buying support, because whether we do or not, I think there would still be enough interest in the market to say that he could. They could raise interest rates, not just him, but they could raise interest rates in December, and support should hold. Now we did, and for that reason, I quite like the pound. On pullbacks, I quite like the pound, and yep. There's a pullback today. Thanksgiving this week as well, mate, which makes things I think a little bit trickier. Probably low volumes. Certainly going into Wednesday, there'll be low volumes. Definitely low volumes on Thursday because that is Thanksgiving. Market tends to do pretty well going into Thanksgiving, so it's a strange week in some respects because traders will react differently because there's traders as human beings as workers will be treated differently during.
Well, some of them are.
Exactly. That's and I suppose that's the thing, isn't it? If the big guns are out of the way, liquidity starts to drop down, which means almost that volatility can pick up, because there's less money moving the market, and then it just will take one big order just to kind of like shift it this way and that. Could pick up. It might be very, very quiet. It might be completely opposite to that. But yeah, I think it's an interesting week this week because it could be. In accordance to the technicals, because of where we sit, you're looking at the Aussie now, we looked at the CAD earlier, I think you could look at the pound, you could look at equities. They all kind of sit in a range that suggests they could turn there. This could be the turning point. Even the CAD could actually sort of like start to pick to the upside. It's in a buy zone in many respects. So it could be the turning week. And I thought it's quite interesting that you said about game changer bars, because I wonder whether we could be in that game changer week, but then Thanksgiving comes into play. So It could be just a game changer week, which starts to create some sort of bottom or some sort of top. And then next week, we might actually see the fireworks.
Yeah, look, only a couple of things this week that are likely to change things, I believe. Thanksgiving may well be that. But Kiwi, again, comes into focus because, again, the economists are tipping that they're going to raise interest rates again.
Yes.
Really?
Yeah.
I know they did flag it, and they flagged that they said they would, and they have. But again, before anybody else, interesting.
Yeah, absolutely, mate. And I completely understand. Your head scratching with that one because. The numbers are kind of high for inflation, but as you say, they are everywhere, and I don't think any of the other sort of like numbers in New Zealand are outstanding to sort of suggest that they could do that. But maybe this is it's difficult because I can't believe they've done it, and it looks like a mistake on the face of it, but then the other side of it is that with the size of the economy they are. Maybe they've got that little bit more maneuverability to be able to do this stuff and raise interest rates, possibly cut back again. It wouldn't be good practice, but maybe they see the problems are going to be a lot worse in the world, and they are able to position themselves early because they won't have such a massive impact because they're a smaller economy. I don't know whether that's the thinking behind it, but yeah, they are moving. I mean, is it an indication? I suppose that's the thing. Is it an indication for the rest of the market, or are they the fish swimming in the opposite direction, and will they be for quite some time?
Yeah, I wonder what their motivation is. Perhaps it's like Australia, and I think most parts of the world at the moment. The housing market is just so hot; it's ridiculous.
Yeah.
Maybe that's got something to do with. Maybe they're trying to slow that down a bit. I don't know.
Yeah, exactly. And I suppose that's the thing when you sort of if you were to dissect each economy, then you would start to look at each sector and say, okay, this sector is actually a lot more important for this particular economy than this other sector, which is more important for this other economy. And also the dynamics between the sectors are starting to split in this way. And this is the thing about the fundamental analysis, really, is that you only get an overview. You don't really die. It's not like it's almost like saying, right, oil is going up. Let's say oil is starting to go bullish. Well, that's all well and good, but then you start to, if you were going to that you could look at the numbers and say, okay, well, OPEC are cutting supply. You could say that the world has more demand because it's coming back online with COVID, and you can get an overall general fundamental a view of it. Cushing, Oklahoma inventories are going down, things like that. You could go right the way down the list and get a macro view on it. But then if you were to go into the micro and then say, okay, well, it doesn't mean that you can then just pick every single oil company and buy it. To a greater and lesser degree, you can. But if you were going to pick the really good ones, you'd have to then go into the companies and start to look at, where's their exposure? Where is the oil market really booming, and which companies have got the most exposure to those people? And what are their margins like in those particular companies? What kind of inventories do they have? You could really go into the macro with every single part of the process, as you can with countries. So even though we can get this macro view of each country and have a fundamental view on it, it's still quite broad. You're not really sort of like looking into each state of a country and seeing where the employment numbers are in those states. You're not really looking into which area is the borrowing coming from. Why are people borrowing? Because if you really wanted to go do a deep dive, then I think you would probably firstly, you'd only really be able to concentrate on one country. So it'd be very difficult to have do all the analysis unless you've got a team of people to do all the analysis. And then come up with a really crisp vision of what you should be buying or selling. So the overall macro picture is all you can really do, and that's really back to the point with a Kiwi. It seems a bit foolhardy what they're doing, but it's difficult really to know exactly what the Royal Bank of New Zealand are looking at. Not the Royal Bank, the
Reserve Bank.
Yeah.
No royals in there, mate.
No.
Trust me. But anyway, yes. Look, no less interesting than you first described, because the week will have its little idiosyncrasies, I'm sure, but they may be a little bit hidden at this point. For Lewis, Aussie Swissy. I'm a buyer, mate. I think we're in a buy zone for Aussie Swissy, and the reason is pretty much because of range. And well, there's probably a little bit more to it. This level upon which we have the bottom of my range, the intersection with the resistance trend line and that horizontal level, to my mind, is a pretty strong confluence area. So for that reason, and I'm not committed to it, because these confluence areas can be either or. If we break down here, suddenly that becomes a strong resistance area. But if we don't break down here, it's a good bounce point. So at this particular juncture, what I am is I won't say I'm a bull. I'll say I've got a bullish bias. I've got everything showing me that the next move is up at this point. Can I trade it? No. I'll be looking for, on a smaller time frame, a higher low. So if price were to come back here to the daily pivot and give me something that looked like shivers, they're hard to, something looked like that or that sitting over here, then I'd be happy to buy. But I'm not a bear. I'm a buy. I'm a bull-ish type person on Aussie Swissy at the moment, which is a little bit contradictory to the Cad Swiss trade. But as I said, Cad is far more reliant, and I don't like to use that word. It's far more correlated to what oil's doing, and oil appears to be in a bit of a spiral. We shall see.
Oil's another one that looks like it's in a buy zone, though, doesn't it? When you look at the weekly and monthly charts, it looks like it should manage to make some sort of grab at bottoming out here.
Yeah, I think it's crucial what happens today.
Yeah,
because if it can close below that level, and I totally get what you're saying, if it can close below that level today or certainly this week, then it's probably got a little bit to go.
Yeah,
maybe down to there, one would think.
And again, you know, and again, you know, sort of like back to the fundamental driver with Dragon Oil down, Austria going into lockdown, but not a massive country, but there is a certain fear now, sort of, you know, starting to permeate throughout Europe that there could be more of these, and we know what happened to oil during COVID. Yeah, obviously, kind of planes come out of the sky. People travel less. Maybe this is why we're seeing the tech sector just doing something just astonishing. I don't know, but you know, is that a factor? We do have other things going on. I think Japan was saying that they were quite happy to draw on some of the reserves to add some supply into the market, which I'm pretty sure the Americans could do as well. So you know, there are things that could unfold here for oil, which could drag it lower. But I suppose, you know, as I say, technically speaking, this is really where it should bottom out, and this is where I'd be looking for buy. This is where I'd want to look for buy signals on a technical level. You know, because I was doing a kind of course on Friday, and we were talking about the charts, and I was saying to them, saying to the guys in the room, whenever you're taking triggers off a daily chart, you're not actually trading the daily chart, you're trading the monthly and to a lesser degree the weekly. So you should always look for where those bottom out levels are and then look for your triggers. So, you know, if I was a wave rider trader, I'd be waiting for oil to show me a wave rider long on the daily, and then I'd be trading it up. I wouldn't be interested in short, because to me this is a dangerous area to be trying to take the short now. So I'd want to see buy signals on this because of the broader time frame. The broader time frame says this is a buy zone. Whether it becomes a buy is then down to your strategy. Couldn't get in on Friday. Oh, it's okay, Lewis. It's okay. You're pretty dead set anyway, mate. Oh, when you say you couldn't get in, did the passwords not work? Yeah, we had to, yeah, contact the guys about that, mate. There was somebody else that had a problem with that, and I did give them a link and it still didn't work, but she's managed to contact the guys, and I think it's all been sorted. Oh, using the old mate. Okay.
Mate, I'm easy fixed today. This is the last one I want to look at. Yeah. And Lewis has a bias on Cad Yen as well. And the interesting part about Cad Yen for mine and Cad Swissy, you would imagine, are a similar pair, because one's a risk off, one's a risk on currency, or both the Swissy and the Yen are considered to be risk off currencies. So you would consider that to be more of a correlation than what I'm depicting here, because I see this currency pair, Cad Yen, as a buy at this point. That may change if we get below this level, but at this very point in time, I see Cad Yen as a buy. Now, if I go even a little bit wider, the reason I see it as a buy should be a little bit more obvious. The level that we're at is very, very strong historically as a resistance and support level. So I think it's critical right now what intraday price action delivers to us, or even daily price action delivers to us. So right now, we are above and have broken substantially that monthly trend line. Like that couldn't be more obvious, right?
Yeah.
So we go back to the weekly, and it's also obvious to me that we're now retesting that level. Now, I guess populist theory or conventional wisdom would have that level as your buy zone in the first instance. Well, I disagree with that, because I think this level here is far more important than that recency. So I think this level here is the one where the bounce, if it happens, will occur. If it doesn't, and we get underneath that, exactly the same thing applies, as I said before, to whatever currency pair I was looking at. I can't remember what it was now. Euro, Aussie, maybe. The decision will be made at this point because it is a strong confluence area. So daily chart, I've got to be a buyer at this point. We've got a clear range here, in my humble opinion, at which we have found the bottom, and we have indeed already come off that bottom. So higher low here makes sense to me. I'd love to see this on a 4-hour chart today, hit the weekly pivot, come back off it rather, and give me a rejection bar in this area. So a higher low here makes sense to me to buy this pair, CAD yen.
Yeah, the yen. The yen has been so bullish on the COT report for weeks and has just not really managed to perform. The seasonality is down for the yen for at least another week, maybe even 2. So we don't really start to rally seasonally with the yen until December. And it's in a very bearish zone right now. But they've been very, very bullish on the yen for a while, and I suppose it has performed looking at this, because the CAD has sold off. For the yen, it has kind of it's dipped a little bit this week. I've noticed that the support for buying the yen has just come off a little bit, not substantially enough to say that it's bearish. It's still very bullish. The COT report is still very bullish for the yen. But there may well be some rallies to the upside before looking for some downside. And I wonder, I've been looking at the yen for a while and thinking, is it a clue of how people are feeling about the state of the world right now, that there is so much bullishness about the yen, or is it something else? It could be something else completely. But I wonder whether things calm down for the yen while we seem to be in this kind of crack up boom sort of phase where nobody seems to be concerned about anything, but then all of a sudden it changes, and the commitment of traders is absolutely on the money, because a lot of support comes in and a lot of buying comes in for the yen as the concern starts to manifest. And I can't. It's an odd one, mate. I find this market really concerning. It's not confusing because you can never really understand what's going on, so you don't worry about that. So you don't even sort of worry that it is sort of confusing. It doesn't do things that appear logical, because there is some logic in there somewhere if you dig long enough, if you dig around for long enough. But I do find it concerning, and I do find it worrying, the amount of money going into equities at the valuations. S&P and the Nasdaq are currently at around about 40 times earnings. The value is at 40 times earnings, which means that it's going to take you. So basically, that means that it's if it's at 40 times earnings, that's around about 2.5% return you're going to be getting, and it will take that long to get your money back after your investment. So if you had £100 and you were earning 2.5% every year, it's going to take you that long to kind of get your money back at 2.5%, which actually 2.5% in this current environment maybe doesn't seem that bad. Where else do you go? Can't get it from bonds. You can't get it from I don't know. I guess savings as well. So there's no cheap money. There's no easy money right now.
We've been saying this for a while. Everything is absolutely red hot.
Yeah.
And you can't squeeze much more out of it.
No.
Where you go is a very, very good question.
And I suppose this is the thing, isn't it? Either the bond market starts to meet the stock market and gives you a genuine return, a genuine yield return after inflation, or the stock market starts to meet the bond market because it continues so high that those earnings, the return from earnings in comparison to price, just become too squeezed. So something's going to happen, but 40 times is high, near 40 times. It's not exactly that, but 40 times is high. 40 times is very, very high for a stock to be going into it. I don't think there's many things that you would say, it's effectively, well, I don't know. I don't know. I don't know.
I'll put it to you this way. I've got a bamboo business, right?
Yeah.
Now, if I advertise my business for sale at 40 times my revenue, no one's going to buy that.
There you go.
Not a hope in hell.
Because it takes them 40 years to get their money back, right?
Totally.
So this is the thing. Sort of like 40 years to get to break even. It just it does seem like a lot. But I suppose with the stock market. But this is the odd thing, isn't it? It's going to take you 40 years if prices are stable from this point till 40 years time. And I guess people are thinking it's going to continue to go higher, but during that period, it's going to reverse at some points. Something else is going to be a better asset class, and at that time, you might have bought in at 40 times earnings, and then you're getting out to go into the other asset class at a loss already, and that's where I find it just concerning. I don't know what people are thinking with this stuff. I don't know where people's heads are at with the stock market. It doesn't really make that much sense to me. That's in America, by the way. It's not the same in Europe, and it's certainly not the same with the Ftse. The valuations are nowhere near as overblown. But I don't know, mate. What do you do? Do you go 40 times earnings and buy a company like Amazon, or do you go half that and buy a company like EasyJet? And I guess you go for Amazon.
Mate, I know what I do. I just put more bamboo in the ground, and I trade currencies off the bottom to the top.
Yeah.
And nothing will ever change that.
Yeah.
I don't believe. So it's pretty simple.
Mate,
George will be in a minute. We haven't even mentioned the Ftse, I don't think, have we? Have you got anything to share?
No, not so much, mate. I mean, to be honest, the Ftse again is in a buy zone, and we'll have a quick look. I'm a little bit shackled at the minute because my other system is continuing to crash, and I've looked at buying a new system, and it's going to take them at least 15 days to build it, and that's a bit longer than I could do with it sort of imminently. Really, I could buy.
Christmas break's coming, mate. So
yeah, I mean, I could buy something off the shelf, but I just this system that I had, it was built for me, and it's lasted over 10 years. It's just a it's just an amazing piece of kit. So actually, I think it's a false economy. It's more expensive to get something built, but actually in the long run, I think it's cheaper. And you get something hardy. Right, let's have a look at the Ftse. In fact, let's have a look at the NASDAQ first, because I'm talking about valuations here. This is just a head scratcher, just the way this is going and going and amazing. Going. Yeah, becoming pretty parabolic here. And if I bring in this chart here, it makes it easier for us to kind of draw a channel along here and see that we're probably near or at the top end of that channel. Now, I don't know exactly where it is. We might be slightly through it. We might be just on top of it. Probably there. I mean, we haven't got any more touches, which is makes it a little bit more problematic. We might be able to tighten that up from there actually, which probably makes it a bit easier. But it looks like we're at the top end of that channel, but it doesn't seem to matter at this stage. And I guess this is my point, is that this is where I get nervous, because where it doesn't seem to matter is when it will all of a sudden matter, and everybody's going to get hunted out, and the stock market will crash. We check that one. We check the S&P as well, also near all-time highs, and the channel on that one is very, very similar in many respects. Sort of somewhere around about there. It might be there somewhere. I don't know where the It's probably that, actually. Somewhere around there, I don't know, but if we're tucking in from the top line, you can see that we're close to it. We're close to the all-time highs. Maybe 5,000 is hit. It's currently at 4.7. Nasdaq is at 16.6 on the futures, that is. So maybe that goes to 7,000 as well. And to the foot. Well, let's have a look at the Ftse actually. Ftse 100 is in a buy zone. You know, we've seen the Ftse have some problems last week, and that may well have been down to some to do with the oil story. I think it's probably more to do with the pound and the fact that the Bank of England are talking about those interest rate hikes. But the Ftse is in a buy zone. I'd like it just to kind of settle down a little bit before getting involved in it. Let's have a look at this number here. Yeah, that doesn't look too attractive, does it? I mean, we're looking at this on a daily, and it looks like this could be the resistance zone now. So within the buy zone, there's inevitable resistance zones, and it looks like we're in a resistance point here. So I don't think this is a buy yet, but I do think it's somewhere between 71.60 and 72.50. So maybe this is a big range, but I prefer it down here. And having not quite tested it yet, I think there's probably just a little bit lower before it starts to move higher again. However, I do think also that the stock market, generally speaking, because it is at these elevated levels, is waiting for downside. And kind of back to the S&P, when does it happen? If we look at the S&P on the monthly, similar to the Nasdaq, when does it happen? I wonder whether we got 2 more months of this before we just start to drop significantly. So sometime around about February next year, end of January, start of February would be when I would expect the stock market to start to come down. But it could happen before, and I wouldn't want to go long, while this is going on. The Ftse looks a lot more attractive because of the structure. You know, nowhere near its all-time highs with the Ftse. Worrying looking bar so far, and there's not that much of the month left. So let's see what that suggests. And if we bring in the pound, then it will be dependent on the pound. You know, what happens to the pound? The pound is also probably pretty close to a buy zone here as well. And if the pound starts to strengthen, then I suspect the Ftse is going to suffer. You know, if the pound really starts to take off because of interest rate hikes, it's going to start to suffer, because there then will be cheaper alternatives, you know, to risky stocks. So people will stick with their blue chip companies that are paying a decent dividend. But remember, you need to. Investors are going to say, how much higher than the free rate are you going to give me? You know, when they're looking at stocks, if they're saying, right, well, the bank is going to give me 2.5%, then I want at least 7.5% from stocks, because the 2.5% is risk free. So how much more than that are you going to give me? And if the Ftse cannot compete with that, then the Ftse will sell off as well. So we could be in for a strange year, 2022, in my opinion, mate. It might be a bit
really
sideways.
Can it get any stranger?
Well, I mean, we've got this crack up boom going on, and it does seem to be that as well. It just seems to be sort of like just boom, 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 upside, 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 upside. But I wonder whether it just gets not necessarily bearish, but I wonder whether it gets a bit rangy. Something like the Ftse may do okay out of that.
Sounds
you hope so? Yeah.
Yeah.
Yeah. Well, I don't see why it can't. You know, the S&P surely does not continue on this particular route for another year. Surely not. I mean, surely it's something more like this, you know, where we kind of see more gentle moves to the upside, then a bit of leveling off, another gentle move to the upside. Okay, that was COVID, but all we've seen since COVID is just up, 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 up. You know, 4 months of downside since March 2020. It's just. It's just something that I don't think I've ever seen.
You struggle to find words, don't you? And you struggle to find words for a good reason, because it is amazing, simply amazing.
Yeah, it really is, and as I say, just a bit concerning. Everybody, I mean, Jules said it yesterday. You know, those people that have bought Tesla and Microsoft and Amazon will think that everybody's mad talking about moves to the downside. But I can tell you, same thing happened here with Bitcoin. Where is Bitcoin? Bitcoin. Let's put this in like this. Oh, I don't seem to have it anymore. They've taken it off. Oh, they've taken it off. How dare they?
Doesn't appear to be there. Lewis,
I don't believe it.
When you were done, I've got a little present for Lewis.
Okay, well, I mean, but basically, mate, the same thing happened with Bitcoin. Up. Everybody's saying, come on, this is going to 100,000, it's going to 1 million. Well, you know, and like experienced traders know it doesn't do that. It doesn't go there in one straight line. You know, it would just be probably scientifically impossible. But you know, it's financially impossible, because at some point they do get stretched. You know, things just the elastic band will snap. And I guess that's what we're looking at here with the S&P. While everybody's getting really, really confident and making loads of money and laughing at everybody, you know, like me, who's not into the boom to the upside. That, you know, that there are the likes of us that will sit back and say, fine, you know, have it, but be very, very careful, because this stuff just doesn't tend to happen without something pretty significant coming down the other way. So maybe a 10% correction, maybe more than that. Who knows?
And when? Can't tell you. But Lewis,
no, I think by February.
There it is, buddy.
Yeah, that would be my analysis. But sometime by February. And the reason I say that is that I think that the you know, with the tapering kind of starting, the tapering would have taken a bit more full force by then, and it might even have accelerated. So by February, you're kind of getting closer to zero tapering. I think it would be June. So it's you know, within the next quarter, you're starting to get to the point where there's no more bond buying at all, and then the next step is interest rate hikes. So you know, February would fit with the seasonals as well, when the US stock market does tend to struggle a little bit. So that's what I'm looking at. I'm looking at a maximum of 4 more months of upside. You know, it might not last that long, mate. That's my absolute maximum.
Look, I think they actually do export this from. It's no doubt made in China. Can you see that, Ash?
Yeah. What is it? It's like a humbug.
That's the toilet paper, man.
Oh, your stuff.
Yeah, that's the bamboo toilet paper.
Oh,
called. I'll probably get in trouble for this guy.
What does it say?
Can't you read it?
No.
What a bugger. It's bleeding.
Hold on. Let me see if I can change my view. No, I can't. I can't read it. Who gives a crap?
That's it. That's it. So you can order that online, not through my account sent to Singapore now. I cannot. Gorgeous George, are you here? I can't see you in the room for some reason. That may mean you're not here.
No, he's not here, mate.
No?
Sorry.
That's unusual. Gorgeous George is very, very reliable. He's possibly caught in traffic or something. I don't know. So yeah. I've still got a few things to look at from a currency perspective. We can do that if you're done, buddy.
Yeah. Let's do that, and we can also come back later and look at some fundamental data for the week as well.
Right, cool. Let's go with the weekly game changer bars just for a tick again, because I didn't get through those really. Aussie Kiwi headed the list of the weekly game changer bars, and we're looking for short here. I think I did mention that. It's impossible for me to trade it at that level, but wait till you get, and Ash has just spoken about it at length, wait till you get to a sell zone and then look to sell it, in my opinion. But it's not there. That'd be superb if it would to make its way to there. May not. Weekly pivot may have something to do with that, or something to say about that, but it may not do that. I went through Euro, Aussie, dollar, yen. Every bloody week comes up, so I can't ignore it. But that's probably telling you something. If it's coming up every week, it has a different direction, as it has for the last one. I won't really call that a game changer bar. That one is. Yeah, that's kind of in there and out there. But last week's was kind of the game changer bar that I like to see. And again, for those of you who aren't aware what my game changer bar is all about, it's all about a bar or a candle that points in a direction. Now, the direction in which this one points is short for me. Now, I'm looking to avoid this pair like the plague, or should I say the pandemic. Yeah, what about my favourite pound kiwi? It's been up to putty, Lewis.
Tell you, mate,
I'll get to
these
that.
two, dollar yen, have been in the most extreme positions on either side of the spectrum on COT data for quite some time.
Oh, is
very
that right?
Weak dollar, very strong yen.
Okay, so why isn't it tanking?
Well, do you know what? It's not a timing mechanism, but I tell you what, we do have now possibly is a signal of some sort. You know, we haven't been able to break. We tried to break out of that bull flag. Okay, maybe we did break out the bull flag. What was the bar you were just looking at? Was that a weekly? Was that last week's bar?
Yes, last week's bar.
Yeah, I mean, last week's bar looks relatively significant to me.
Yeah, I like the shape of it, obviously, and I like the fact that it's actually got a bit of green tint to it. That's all good for me. Yeah. The one thing that I would need to wait on, however, I mean, you could trade the weekly bar if you want to, but from a risk to reward point of view, it's pretty poor because you're going to have to put your stop up here somewhere. You would enter here, you're trading straight into a monthly pivot, straight into the bottom, so it doesn't make sense. No.
Just a signal, isn't it, maybe? Yeah, Russia talking about invading Ukraine. I don't know whether we've got sort of, that much nervousness out there, but you know, there are these stories floating around which suggest a little bit of tension in the world right now.
Not surprisingly.
I mean, they're always there, aren't they? But COVID seemed to sort of like be the one that pulled the rug from under everybody's feet. And you know, there's lots of stories out there that you think are going to be the rug pull and they don't end up being. But I thought that one was relatively significant. The US are sort of like providing intel that Russia are about to invade Ukraine. France are coming out with the muscles and saying, look, you guys go anywhere near that zone, there are going to be consequences that you guys will not want. So I don't know, and I'm just trying to think of what can strengthen the yen. You know, you're saying about why isn't it tanking? That the catalyst isn't there, but is there something coming? Is there something on the horizon? I'm just sort of like putting some possibilities out there that the stories that we might need to watch the development of.
Well, I think the answer to my question, I answered myself. The reason that dollar yen's not tanking is because the dollar's on fire. Yeah. It is, however, once again, at a resistance level, in my humble opinion. So that's kind of why I'm okay to even mention dollar yen, because I think it's due for a little bit of a cooling off period. Whether that means it's going to reverse or not is another story, but I can definitely see that there's room to take something out of this market if it does, in fact, look like retracing. So the index is telling me that we're at I won't say sell zone, but we're at a point where the market could very easily retrace, if not reverse. So I totally get that. And therefore, dollar yen looks interesting to me, having almost given me a false break of resistance signal, but it's not quite there yet because I'm not yet back into that range. Yeah. If we do sink into this range and retest the top of it, then I'm in. But at this point, the answer is no. Look, I'm not here to predict where the market's going. Never have been, never will be, because I haven't got a bloody clue. Yeah. But what I do, have a clue about is once it tells me what it's doing, then I can take action. So that's why these lines are so important to me. Because if we stay above it, then I'm not a seller. But if we get below it and retest it, then I'm a seller.
Yeah.
So
Yeah.
so it's got to do this before I do that, and that's kind of always the way I trade. It's never about, for me, okay, I'm predicting that what's this dollar yen? I'm predicting that dollar yen is going to crash. I don't know. Wouldn't have a clue.
Yeah,
But if it
and I
does,
suppose that's the great thing about technical analysis, isn't it? Ultimately, the charts will tell you.
they will, totally. Sometimes they will just go and you haven't got a chance in Hades of getting in on the action until it pulls right back. So, you sometimes got to be really patient. But I won't say even a number, 5 out of 10, 6 out of 10 times, whatever it is, it will give you a little hint. It may not be on the chart that you want it to. It could easily be on a smaller time frame, could easily be on a larger time frame. But if you're willing to stick to your guns, if you like, and say, if this happens, then I'll do that, then I think you'll be in a far better spot than trying to guess the next direction. I really do.
Yeah.
Shift the channel in there is another perspective. Shift the channel. This channel down to there, maybe. And you're seeing a break and retest, right? Yep. See what you're seeing, mate? That's why I'm not trading right now, because I don't know. I see both. I can make a case for both. So until it gives me the signal, you stay out. But yeah, totally see what you're saying. Depends if you use the bottom or the top, doesn't it? Trade of the week. Interestingly, it goes back to what I was talking about before for me. It's either Cad yen long or Cad Swiss short. Interesting. It's really interesting. But of course, as I've just said, unless I get a setup, I won't be trading either. But I've got a setup already on Cad Swiss, so I'm going with that. I also like Aussie Swissy. Did we talk about this earlier? I think we did. But the reason I like Aussie Swissy is not just because of this level here. I think the Aussie has claims. And whenever the kerfuffle settles down about why it is, I won't say tanked, but it's certainly come off substantially, because I think the market suspects, it's reading that the RBA is just going to be stubborn, similar to what you were talking about earlier, Ash. The RBA just is stubborn and isn't doing interest rates until they have a good reason. Look, I think the RBA is a wise organisation, frankly. They don't get it wrong too often, the RBA, and I'd rather put my stock in that. Stock being not a stock market thing. I'd rather put my stock in their opinion than I would most other reserve banks, to be honest. And for that reason, I think they're being prudent, and I think they're right. And the economy in Australia is, honestly, the talk around this place at the moment is just absolutely red hot. There's nobody that's got a bad thing to say at the moment. Everything's looking rosy. And as we come out of the dreadful situations that we've been in with Sydney and Melbourne being in lockdowns, for seemingly ever, I think, retail sales are going to go through the roof. The economy is bubbling along. I think it's just going to be rosy for the Aussie for the medium term. So timing is everything, of course, and the more they sell it off, I think the better price we're going to get on it. Whether this is now is a great question, but as I say, this is a crucial area right now. And if I get the higher low that I'm looking for, I'm a buyer. If it comes underneath here and goes south, then obviously I'm a seller. The only one I have not looked at is Pound Aussie. Pound Aussie, once again, is at that particular point that I'm interested. It's not telling me yet exactly what I need to see, because it's just such a mess. But on the 4-hour chart, you've now got a double top. And if I was to see a lower high in here, maybe even off the daily pivot, that suggests to me that we are going short. However, if I then put that in there, this could double up as a false break of that resistance line. So get rid of that. I'll park that somewhere else. So I've got a false break potential here. So if this was to close below the trade line and then retest it, better still retest the daily pivot, I'll be all over that like a shark on a mackerel. So that's where I'm at with pound Aussie. I think that's a sell. Don't know that you'll get much out of it, to be honest, because there is a strong support level down here and the weekly pivots down here as well. But if you can get, say a 20, 30 pip risk, maybe on an hourly chart, maybe even on a 4-hourly chart, then you can probably look to pick up, say your entry was there, stop loss there, 40 odd. You can still get 1-to-1 before you hit support. So I think that's a reasonable position to take. And if it does in fact reverse, doesn't look like it's going to, I've got to say, but if it does in fact reverse, then you're probably looking at the monthly pivot, which is about 2-3 to 1. So I think that's reasonable to look at pound Aussie. And that's really the last of my watch list for the week at this stage. But of course, that can change day to day. We shall see.
Well, let's have a quick look at. Do you want to finish up with what we're looking at this week, and then we can wrap it from there?
Yep, I'm done pretty much.
Okay. So let's finish up with this, just so we can sort of like make an assumption of if there is any movers in the market, anything that's likely to move the market. I have to say, on the face of it, it doesn't look like there is. It appears to me that the market is just going to continue because because Thanksgiving, as I say, is just around the corner. It's going to get quite quiet. We do have some numbers from New Zealand later on, retail sales figures, and some PMIs from Australia as well. I think we definitely want to see these start to come in a bit hotter. Australia's been cooling off a little bit. Retail sales also from New Zealand, I think, is quite an important one as well, because the Reserve Bank don't seem to be that fussed about any of the other numbers that they have. They seem to be very, very focused on inflation, and inflation is hot over there as well. Previous at 3.4%. What we've seen really with the market is the nations of the world, or the people of the world, going out and purchasing possibly a little bit earlier for Christmas, maybe because of supply chain concerns. So if that trend was to continue, that should pick up. I'm not sure why the forecast is so low for New Zealand, but maybe lockdowns. I'm not sure, but if the trends to continue, that really should be a pretty good number, and I'd be surprised if it's that low. But you probably have to do a bit of digging around to see why. Manufacturing from Europe as well. I think you can almost ignore the European numbers right now. Christine Lagarde is basically saying we are not moving. We don't care. We're not moving. One thing that I would say, though, is that if this continues to be, if this is weak, if we start to see weaker numbers coming from the Eurozone, then it really will be a pretty solid sell signal, because if they're not going to be raising interest rates anyway, the numbers that if the numbers come in weak, then it just kind of adds another nail into the coffin. The numbers come in strong. Will they be pushed towards it? Possibly. These numbers would have to be significantly better for the ECB to change tact. Pound, a bit different. Certainly if these numbers are very, very positive, then it pushes that interest rate hike a little bit closer. The possibility a little bit closer in December. So it could be that this is the buy signal. We're looking at numbers from the pound to see where the buy signal would be. Flash PMIs also from the United States. It's not the big one, but again, we're going to get a little bit more of an idea. Decisions probably already made, and I think the expectation is they raise interest rates, which means that it's probably priced in. After that happens, we might well see a little bit of cooling off with the Kiwi. I'm not so sure, but that's what I'll probably be looking at. GDP, I think, is going to be an interesting number from the United States. The GDP, the last GDP number we had was pretty cool. And since then, the numbers that have come out have been pretty hot. So it would suggest that the preliminary GDP quarter on quarter should be pretty hot. And you can see that actually expectations are for another 10% rise from the previous number. So those GDP numbers, I think, are going to be interesting. You know, a low number possibly could be some sort of driver that takes the stock market a little bit lower. But as I say, decent numbers and Thanksgiving would suggest a continued move to the upside. Then we also get some inflation data from the United States as well, and University of Michigan inflation expectations that could be of interest as well. We saw the consumer revised consumer index a few weeks ago. So the consumer index was, I think it was around about 66, and it was well below where it should have been. So consumer sentiment is more of a forward figure than the retail sales numbers. Retail sales were high, and yet the consumer sentiment was low, and there was a confusion with the market. But again, it might be because people are there going, we are going to buy now because we are not confident interest rates won't continue to go higher. And if they go higher, we are losing purchasing power month over month over month. So it might be that these numbers would now need to kind of boost up a little bit to suggest that the rally is going to continue. If they're low again, we might be starting to get that indication that we probably need to see those stock markets come down. Crude oil inventories, we're going to be watching very, very closely to see if we are in that buy zone. FOMC minutes, do they start to actually tell us anything? There's been some rhetoric from different Fed speakers saying maybe we need to pick up tapering. Jerome Powell's kind of come out and still saying, it's still kind of like talking this transitory language. We also have the Brainard and Jerome Powell decision, whether who's going to be the next governor of the Fed, the chair of the Fed. We have that this week, I think. So that might well shift the market rounds a little bit. Then we have Thanksgiving, so bank holiday on Thursday, which, as I say, we probably will rally into unless something happens with these numbers. Bailey speaking is going to be a big one. The market's going to be really interested in what he's going to say, because the headlines are, I'm worried. Hold on a minute, maybe it's not a problem. So do we actually get some actual direction from him this time? And can the press ask him questions to probe him to actually make the decision a bit easier for us to suggest what's going to happen in December? Then we got Lagarde coming out as well. So, you know, does she say anything that is bullish for the euro? Probably not. So that will be the week ahead, mate. I think some numbers that don't look that significant, but might well give us some further indication about what they actually do when the next genuine announcements come out.
Cool. Yeah, so a bit each way, I suppose, this week until it becomes a little bit more obvious. But these are the weeks that tend to interest me, because we do tend to see, if there's nothing really substantial happening, the market ranges a little bit, and when that happens, you can see the market bounce from there to there to there to there to there. That's great. As long as they give me those higher lows and lower highs, we can make money out of that. So I'm okay with that.
Yeah, let's see if that transpires.
Yes, gorgeous George has just let us know that he's having connectivity issues, and he won't be with us today, but of course he will duly attempt to get that sorted out, and we'll be back with him next Monday. And of course, those of you who like to have a look at what George is doing, which is quite fascinating for me, you can join him on Wednesdays right here at 9:30 GMT. I'm pretty sure that's right. Buddy, that's another Monday wrapped, I reckon.
There you go. Well, you're not here Thursday.
Not here Thursday.
It's a big day for you.
It is a big day for me. One I thought may never arrive. But there you go.
Yeah.
Yeah. Just one of those things that happen to you if you hang around long enough, I suppose.
Yeah. So it's
I'm not,
Jeff's birthday on Thursday, and
I'm not happy. I know.
He's going to be having a big party. We're not invited.
Well, you can, but no, the borders aren't open yet.
We can't come.
You can't get in.
Well, so you won't be here, mate. But have a great time on Thursday.
Thanks, mate.
And a lovely break. And we will see you back bright and fresh on Monday. I will
not
be
sure
in
about
Thursday.
the bright and fresh bit, but I'll be here.
All right, we'll see you back on Monday. I'll be here on Thursday, and we'll have the quiz. And Ainsley will be in probably as well to talk about gold and a bit of oil. So have a great week, guys, and a great one to you, mate. Happy birthday for Thursday. And,
thank you, mate.
Thank you to you for being my trading buddy. Thank you to Angel. Thank you to the guys in the room for being our buddies too. I'll see you Thursday, and happy birthday to the big man.
Thank you, buddy, and thank you for the well wishes in the chat as well. Thank you, guys, much appreciated. I'll come back an older man than I was today, but probably just a little bit wiser, and hopefully without a hangover. Have a great week ahead. We'll catch